Hi everyone, I'm Kyle Bechet, and this is the AAF Exchange, a podcast from the American Action Forum, where experts provide clear, data-driven insights into today's economic and domestic policy issues. Welcome, and thank you for tuning in. On this episode of the AAF Exchange, the 2024 economic outlook, the government funding debate, and the long-term budget outlook. Joining us is AAF's Douglas Holtz-Eakin. Doug, thanks for joining us.
My pleasure. Happy New Year.
Happy New Year. Before we jump into everything today, tell us what's been on your mind.
Drug prices.
Yeah.
So, again and again, we go through the drug price debate. I was struck by a column on the president's re-election strategy, focusing on his success in combating high drug prices. And so, I thought we should just look at the numbers. I mean, and the last time we really scrubbed the numbers was back in 2019 before Senate Finance testimony. And at that time, there was no obvious drug price problem in America. There were some very targeted problems. One was specialty drugs, especially oncology drugs, and the other was off patent generic, or not generic, off patent drugs with the sole supply that Martin Schreckle was buying up and raising the price. And so, a one-size-fits-all solution clearly wasn't right. We're back having the same kind of debate. One-size-fits-all, got to negotiate, all this stuff. So I thought we'd just look at the numbers again. And conveniently enough, the administration had put out a report from HHS on drug price increases from 2017 to 2022. But they did something remarkable, which made me crazy. They looked at the average price increase of drugs that went up in price. So essentially ignored any drug that stayed the same or went down. So let's look at the average drug price increase if drug prices went up. Now, this is just clearly cherry picking the data. So I went crazy. This is in the Daily Dish, so you can read the details. And I thought, okay, upper bound, let's put back in a zero for every price that they threw out and recompute these things. And of course, they're lower because now you have about 25% of the drugs they threw out. Put 25% zeros in, you get lower numbers. But the pattern's not really different. They're lower now than they used to be, so maybe Biden wants to take credit for that, although nothing he's done is into effect yet. They're still pretty high, 7-8%. So one of the two possibilities is true. It could be that they're just super sensitive to this and they want the prices to be as big as possible. Or number two, if you actually had the data and could get the negative numbers, it looks really different.
Yeah.
The data cost thousands and thousands of dollars. So we don't have the data, and I was hoping you'd buy it. So that's why I'm here at the podcast. I'm angry that you have not yet bought the data. Anyway, this debate's going to continue. The lack of precision and clarity in it drives me crazy.
Yeah, I think it's an election year too, so I bet we are going to hear a lot about drug prices. Everyone wants to, there's a voting bloc out there that really cares about these drug pricing, and there's, for good reason too. But it's interesting that you say that they only looked at the prices that went up. That really strikes me because it also seems, it's a trend with this administration where it seems like we only want the data that helps, whether it be on deficit reduction, whether it be on the economy.
But honestly, it feels like amateur hour. I mean, it's just so obvious what's going on. Come on.
Yeah.
If you want to fool me, put a little effort in. Come on. You mentioned the Dish. We also have a great resource at AAF where we have all of our information on the Drug Pricing Clinic, which is a nice little handy web page with all of the information and all the resources we have on this topic there. Yeah, and my fantasy would be that we, find a way to get access to all of these data. And then we would know the actual recent pattern of list prices. Remember, these are the list prices, and we know there are lots of rebates out there for some of these drugs, and so there are net prices out there. As a spoiler, there is a report out by a guy named Adam Fine who does this every year, who says that net prices, the actual price received by the manufacturer net of rebates, fell, and so they're not getting more, they're getting less, and this happened for a couple of years.
Interesting. Well, as we said, I'm sure we'll be back to this topic again in 2024. But let's talk about the economy, our favorite topic these days, which, inflation was one of the most talked about issues in 2023. I saw a poll out this morning that said the economy is number one on voters' minds. So where do we stand heading into 2024?
A little bit of uncertainty. We know looking back, 2023 was a really quite successful year. Lots of disinflation, without a recession. Unemployment has remained low. Real wage growth has returned about the final 6 months of the year, and so that's great. Going forward, I think there's a big disconnect on a couple of fronts. Disconnect number one is between the Fed and Wall Street, the chatterboxes on CNBC and Bloomberg and places like that. If you use their preferred measure, the Personal Consumption Expenditure Price Index, and you look at the core to get trends, it peaked at 5.6, and last reading in November, year over year, was 3.2. So that's 2/3 of the way to 2%, which is the target. That suggests that we have, and that took 22 months, so that suggests we have like another year. Wall Street's talking about how they're going to be cutting this spring, whereas we're a year away from hitting the target.
Yeah.
So I don't see them on the same timetables at all. I really don't. So that's disconnect number one. Disconnect number two is between the household sector and the business sector, who are, by the way, connected. Households buy from businesses, businesses hire households. So, disconnects there are troubling to me. Household sector has remained strong, has carried the economy. Business spending, business fixed investment, non-residential structures, equipment, what they call intellectual property products, software, things like that, that's dead in the water in the third quarter, continues to be dead in the water in the fourth quarter. They can't stay disconnected forever. Either business spending picks up to match household, or scarier scenario, household spending declines and goes to the business level. That's the real issue right now.
It's interesting. You mentioned the disconnect, I think, between Wall Street and the Fed, we saw markets do this. It seemed like they were trying to price in a cut back in December. It's sort of coming back now. So what will the Fed likely do this year? We saw the minutes.
The minutes were unrevealing.
Yeah.
So if there was any news out of the minutes, there was no news. Like there was nothing in the minutes that talked about timing of policy rate changes. So it noted that many participants felt that the policy rate would be lower at the end of 2024 than it was at the present.
Interesting.
When would that happen? Not a clue. How big would the difference be? Not a clue. Many participants, not everyone. So, very, very uninformative on what the market has interpreted as a guarantee that the Fed's going to cut. And you heard as much as like, there are going to be 3 cuts of 25 basis points. No, they are not lining up.
With the data we have right now and the sense you have of the economy, do you even foresee a rate hike in this year?
I don't. They particularly some of the more aggressive regional bank presidents and governors continue to remind people that this is a possibility. I think that's just due diligence. I don't think it's in the data. They are still tightening, right? Remember, if they keep the policy rate unchanged at 5.5, then as inflation declines, real rates are increasing. So that's tightening. And they're still running down the portfolio. So that's financial tightening in and of itself. I think they're content to do that. That they think they have a long way to go. The Fed staff says that we hit 2% in 2025. So there's a patience in the Fed that's not present elsewhere. They're willing to sit with the status quo for quite a while and have this passive tightening and see how it plays out.
The soft landing that we always hear about, is that still on the table?
It's still on the table. A lot of every major forecaster has a slow 2024. So, and the Fed's term for this is a sustained period of sub-trend growth. Trend is 1.5, 1.8. It's sub-2 to begin. Below trend then is 1. The difference between 1 and 0 is not dramatic. It's pretty easy to bounce the economy around. So any way you look at it, you could have a soft landing. We grow at 1 or a half or something like that, and that's going to feel pretty unsatisfying. Or we don't get a soft landing, we grow at minus 0.5. There's not a real big difference except the sign, and of course that'll get tons of attention.
Speaking of forecasting, tomorrow is of course jobs day. I don't want to ask you a number here, but what should we be looking for?
I'll give you a number. 517,000. But that's not the jobs number.
Yeah. Thank you. We'll save the numbers for the trivia section, Doug. No, I mean, but what we always get, the top line, and everyone's going to use it for the narrative. But what should we be looking for in an economics perspective?
The things I have been staring at have been this sort of index of aggregate payrolls, which is essentially demand for labor. How many workers do you want? How many hours are you going to work them? What are you going to pay them? Average hourly earnings, all in one thing. And that has declined dramatically. So they have cooled the job market. There's no doubt about it. But periodically, it sort of throws in signs of heating back up. Same is true for the average hourly earnings. You'd like both of those things to stabilize at sustainable levels. And so I'm staring at those. The number of jobs, the unemployment rate, I think, are less important at this point.
Interesting. All right, let's move on to Congress.
Must we?
I think we have to. They're back next week, so we have to talk about them a little bit.
Okay.
So when they return, it faces, a pair of government shutdown deadlines. We started hearing the chatter about this already in the news. Now that back again, the first is just over 2 weeks away. I mean,
yes, no,
I think it's actually under 2 weeks, but when they come back,
it's really quick.
Right. So, what are the big holdups? And how likely are we? Do you think it will be that Congress will be able to get a deal done?
So let me just attach the following very large asterisk to the entire conversation, which is we're not in the room and we don't know behind closed doors what it looks like, but at least publicly, there is no known agreement on the scale of the deal, meaning what's going to be the top line for appropriations, to which we'll have to fit the 12 appropriations bill, and how it will be divided between defense and non-defense. This sort of really big architecture is not publicly agreed on. We hear the Senate, Susan Collins and Patty Murray, agreeing that they should do the debt limit deal, the Fiscal Responsibility Act, and so but the House, that's not obvious. So that's a big deal. We don't know the scale. We also don't know the scope. We have been assuming that the scope includes supplemental appropriations for Israel, Ukraine, Taiwan, and now roll in border policy somehow. So those four things are also on the table. Are they all part of the same deal? Do you separate some of them out and not? Right. Latest rumor is that the House Republicans want to roll the border issue into the appropriations bills themselves, not put in the supplemental. That would be a real wrench in the at least in the public works. Maybe there's an agreement in the background again. I don't know. But none of this data allows you to easily extrapolate to we're going to fund it easily in plenty of time without some sort of hiccup. No, it looks messy at best.
Right. Yeah. I think it's interesting because you say that it's hard to know the scale and scope because we don't know what's going on behind closed doors, and we only get to hear the House Republicans on the border yesterday talking with Speaker Johnson saying we've said this is what we want, and that's border security, and we hear that the Senate is talking, but we don't know what they're talking about and what the mechanisms will come through on this.
Progress.
And they're making progress, yeah. But then they leave
so
rooms.
Comforted by that,
right? But then they leave rooms, and then the negotiation's over. But what's really happening is hard to. But hopefully they can get to a deal by the first deadline and save us from another government shutdown.
Let me just say this lovingly. Remember, this is appropriations for fiscal year 2024, which started October 1st, 2023. And the lowest of low of jobs of Congress is to fund the government. And they haven't been able to do it. So this is one of the least functional situations I've ever seen.
Interesting. Yeah. Well, let's take a break from Congress for a second and do your favorite part, your other favorite part of this podcast, which
Every
is...
moment with you I savor. You know that.
Well, let's do the trivia section then. See how much you savor it still. This one is from an insight we published this week, so we'll see. Last year, federal agencies collectively finalized approximately how much in net regulatory costs in 2023?
$129 billion.
Correct, yeah.
I think I read that.
Yeah.
Good.
Dan Goldbeck put the 2023 year out in review and finalized was 129.
It was smaller than I had anticipated. Yeah. Honestly, I thought I was.
It was fifth most since we've started tracking.
Yes, but I was bracing for like 180, 160, something like that.
Right. Well, because I think you're thinking about the proposed rules out there, because there's that one admissions rule that I wrote this down. It was the 180 billion on its own.
The heavy truck. Yeah. No, and this is the extinction for fossil fuel fired heavy vehicles. I mean, it is. It's not even disguised as anything else.
Right. So, I mean, but if you look at those proposed rules, I mean, 2024 was fifth most in our time, so that's top 5. But we're in for another year of heavy regulations.
Well, it was also in the same insight. So, this is a quick question for you. What's the tab for total proposed rules that are sitting out there?
I don't know that off the top of my head. But
it's over 600 billion.
Down. Over 600 billion.
So they're never going to finalize all those in 2024. But if they did, that would swamp by a factor of 3 any previous year.
I mean, but it's going to be a rush to the deadline because we have this.
Did I actually just get to ask a trivia question?
Yeah.
You couldn't answer it. I like 2024.
Did you notice how I just try to keep pushing on to the next part I wanted to bring up, and now I've lost my train of thought on that. So you've now stumped me twice on the trivia in the trivia section, but so. Anyways, there's going to be this mad rush too this year because we have a deadline for when they got to get these done before Congress's midnight rules could kick in.
Right, and so a potentially quite costly one that's been politically a real football is the SEC disclosures on ESG, right? Where the proposal just lit the world on fire. I don't know when the SEC is going to put it out, but because of the potential for a Congressional Review Act, rescission of the rule next Congress, they're going to try to get it out before that window closes. That's a serious consideration because that wasn't a partisan disagreement. There are a lot of Democrats who thought that rule was overreaching too. So we're going to see some things like that get out here quickly.
Mm-hmm. All right, back to Congress. We'll set aside the short-term funding battles for a second. Let's look at the bigger budget picture. You've argued that the outlook for federal deficits and debt is simply just unsustainable.
Correct.
And that addressing the current trajectory is one of the United States' most pressing policy challenges going forward. How do we get politicians to talk about these issues, let alone act in an election year?
They won't. So I honestly... in the larger scope of events, what has happened is that the deficits and debts, the debt in particular, has risen in the entire 21st century, even relative to GDP. And the reason is that the presidents haven't provided any leadership in this front. So I went back and looked at the history, and I thought about the Bush administration, which I worked. And I think it's fair to say that those budgets were about winning the war against global terror at all costs. That's all was to it. If budget is policy, that was the goal.
Right.
Look at the Obama era budgets, and basically the message is everything's good as long as the rich pay their fair share. We can even add an entitlement. We'll do the ACA. You look at the Trump administration; they say nothing. There's nothing about debt or deficits for 4 years. And the Biden administration comes in with the grandiose plans: Build Back Better, lots and lots of spending. No problem. Let's just do it. So, for the average American who doesn't spend their time listening to us on the podcast, which is hard to imagine.
Right, yeah.
Weird. And, is not tuned into fiscal affairs, they haven't been told there's a problem. So if you're the average congressman, you go back to your town hall in the district and say, I got a plan. We're going to cut Social Security. It's a good idea. We need to do this.
Yeah.
Man, forget it. You're now unemployed. Yeah. Just that fast. So until there is some genuine high-level public education from people who matter, presidential candidates in particular, there isn't going to be a serious conversation. There isn't a chance Congress will move. They need some air cover from the executive branch.
Mm-hmm. So, I mean, we know the entitlements are the mandatory spending out there. That's the real issue in these longer term budget outlooks.
Can we do numbers?
But yeah,
lots of numbers,
please.
So, for your next cocktail party, to make sure you can drink alone, here are the key numbers. CBO projects that over the next 10 years, we're going to spend $80 billion at federal government. 10 of that will be interest on previous borrowing, so that's now becoming a big number, gets bigger than the Pentagon, for example. That's big. 20 is annual appropriations. So things they're fighting about to shut the government, 20. That's by no means where all the spending is. The remaining 50 is mandatory spending and budget talk, entitlements in real world talk. And of that 50, 32 is Social Security and Medicare. So there are only two things to deal with. They are Social Security and Medicare. Social Security is growing at an annual rate of 6% over the next decade. Medicare is 7.6%. There isn't a revenue source you can find that's going to grow faster than the economy. So revenue is going to grow at roughly 4%. That's the problem. You got 4 trying to fund 6 and 7.6. That's the money. No one's talking about Social Security. No one's talking about Medicare. And it's not even close to adding up.
In fact, we all had a bipartisan agreement in the State of the Union last year that we weren't ever going to talk about it.
Yeah, and believe it or not, I threw a fit about that. I've never done that before.
Yeah, I think you did it on this podcast.
Oh, never mind.
Yeah, I think I baited you into that too.
It probably wasn't hard.
It's always good for views if I can bait you into something,
Yeah. But I mean, honestly, all kidding aside, Kyle, I mean, it doesn't add up.
Yeah.
It hasn't added up for a long time, but the clock has ticked. Like, it didn't add up in 2003 when the CBO director, but we're now 20 years down the road.
Yeah.
It's getting harder and harder to fix.
Yeah. I mean,
waiting is not our friend.
Like you said, I mean, a lot of people aren't talking about because the politicians, because our public officials aren't talking about this. But every time I go and help Gordon set up his budget chart book on the website, I just have this moment of panic. Like, what am I going to do when I'm, in the retirement zone?
So I think it's a huge deal because this is what the testimony I gave. The U.S. has a growth problem.
Yeah.
We're growing a percentage point slower in the 21st century than we did in the 20th. That's per capita. So it's not about how fast the population is growing. It is slower. But even per capita, we're not doing as well. So the standard of living is not rising very fast. It takes twice as long for the standard of living to double. The federal budget is a big headwind to growth. All the borrowing competes with private sector borrowing. That's the crowding out story. The federal budget is there to take money from the private sector, even if they're not borrowing. If they're raising taxes, they're taking it and subsidizing consumption. You don't grow by consuming everything now. You grow by foregoing consumption, saving, investing, and having more the next year. So the federal budget is rigged to be anti-growth. And so it needs some work. It's a really big policy problem. It's a really big economic problem.
In that testimony, you talked. I believe in that. I believe in the same testimony you talked about the Tax Cut and Jobs Act. So we're going to have that conversation coming up.
That's another $3 trillion.
Yeah,
and I think we need to grow, and I think there are pieces of the Tax Cuts and Job Act which were incredibly successful. Like the corporate rate cut put us back in the game internationally, haven't lost the headquarters, things like that. But it's a fair observation to say, really, we have $20 trillion of deficits, and you're going to hold on to this thing? So I think the right way to think about it is not we want to hold on to it or not. The right way is to say, okay, what tax code do we need to be successful in these circumstances? The pieces that are pro-growth we need. The rest, they're going to have to go.
Well, Congress isn't going to have a choice but to have a conversation over that one. So hopefully especially in this election season, we hear quite a bit on the plans for these, because I think you're right. You can't just...
So again, the other big picture thing is that the debt ceiling comes back a year from today.
Yeah.
I mean, so... What's the plan on that front?
Yeah.
Now we know it doesn't literally hit January 1 because the Treasury can extend it for a couple of months using the extraordinary measures. But usually the drill is we'll do something with the debt ceiling, suspend or raise, but we will promise never to sin again and do these fiscal reforms. If we're not going to talk about Social Security and Medicare, we're not going to talk about any of the fiscal reforms that matter. So are we planning for the debt ceiling? Doesn't feel like it.
Yeah. So debt ceiling was going to be my final question, because it does come back in 2025. I mean, you have to imagine that they're going to have a conversation over fiscal responsibility. So when it comes to that,
I would prefer that the public be engaged in the conversation and happen in the campaign. But I'm naive.
Yeah.
It is more likely the election will happen, and the newly electeds will beg a lame duck Congress to take care of all these problems for them. The lame duck Congress will figuratively stiff them, and then they'll have to do something quick. And things done quickly are never good.
Yeah. Well, the majorities in this Congress, I don't think, it's already been hard enough to get a majority. So I don't know if this next Congress can hope that the lame duck will help them out just from a math perspective. But anyways, Doug, I'm looking forward to continuing all of our conversations in 2024 and hopefully getting some good conversations from the campaigns to talk about in here.
Fingers crossed.
I hope you enjoyed this conversation. Tune back in for our next episode, where our experts will provide clear, data-driven insights into today's economic and domestic issues. I'd also encourage you to check out any of the links in our show notes and also follow us on social media to learn more about AAF. Don't forget to subscribe on iTunes, Spotify, or Google Play.